Hey everyone, welcome back to Corporate Decoder. Today we're dissecting a report that might just reveal whether this company is truly electrifying the market or just blowing a fuse. Stick around to find out. This document is essentially a snapshot for August 2025 from Electrovaya Inc. For those unfamiliar, Electrovaya is a company involved in developing and manufacturing advanced energy storage solutions, primarily focusing on lithium-ion batteries and related vehicle and grid storage sectors. Now let's dive into what really matters. This filing includes their unaudited, condensed, interim consolidated financial statements. We're looking at the period ending June 30, 2025, and they're giving us a comparison to the previous year. The company is reporting for the third quarter, and it seems like things are quite dynamic. We see a focus on their financial position. One of the key numbers to watch is the total assets. For the period ending June 30, 2025, it stands at 4.88 million. Compare that to the prior year's figure of 4.88 million. That's a very slight change. Now, in financial reporting, a slight change like this might appear negligible, but it can mean that the company is maintaining its asset base. Total liabilities are also reported as 4842782288. We see a slight improvement in liabilities, which is generally a positive sign. Their earnings per share basic for the period ending June 30th, 2025 are reported at $2.52. This is up from 2.37 in the comparable prior period. So it's a positive trend for shareholders. Their earnings per share have gone up. Looking at the equity section, we see total equity stands at 5314789. This represents the owner's stake in the company. Their share capital is listed at 320,078.05. A company's share capital is the accumulated amount of money or assets that have been raised by issuing shares. This 912,841 associated with retained earnings is a significant number, representing profits reinvested back into the business rather than paid out as dividends. Now, let's talk about warrants. Warrants are like options that give the holder the right to buy a company's stock at a specific price before a certain date. We see figures related to warrants, and it's important to track these as they can represent potential future dilution of existing shares if exercised. The company also breaks down its operations and financial data by location. We see data for other location indicating operations outside of their primary markets, which can sometimes suggest diversification or emerging markets. Then we have data specifically for the United States. This is a crucial market for many tech and manufacturing companies. And of course, Canada, where the company is headquartered. Tracking performance across these regions helps us understand where their growth is coming from and where potential challenges lie. The company also reports on derivatives liabilities. These are financial contracts whose value is derived from an underlying asset, group of assets, or benchmark. Managing these can be complex and carries its own set of risks. We see financial liabilities extending to 2025 and even beyond to 2029. This gives us a glimpse into their long-term financial obligations and how they are managing their debt structure. The filing mentions different levels of fair value hierarchy. Level 3 assets and liabilities are the trickiest, based on unobservable inputs, and require significant management judgment. High proportions of level 3 could indicate areas where valuations are more subjective and potentially volatile. We also see specific mentions of board members or key personnel like Dr. Rajshekhar Dasgupta. Their involvement in different reporting periods and their roles can be important indicators of management's focus and strategy. Similarly, mentions of Dr. Sankar Dasgupta provide insight into the leadership team and their engagement with different aspects of the business. There are some historical dates mentioned like February 2021, which might tie into significant past events or agreements that are still relevant to the current financial picture. We see a transition period starting October 1, 2024, leading into the period that includes June 2025. These are important markers for understanding the flow of business and reporting cycles. The continuity schedule for warrants is essential to track how many warrants are outstanding, exercised, or expired, which directly impacts share count and earnings per share calculations. And details of share warrants themselves tell a deeper story about the terms and conditions attached to these potential equity instruments. The company also reports on stock options with specific mentions like stock options for team member and going all the way down to stock options 1 member. This detailed breakdown shows how many stock options are being granted, exercised, or are outstanding across different tranches or groups, which is a vital part of their employee compensation and incentive structure. We see stock options being reported for different periods, including the full year up to September 2024, and then also broken down by quarters. This helps us understand the ongoing equity awards, and common shares member simply refers to the basic shares of the company. We see these are reported for various periods, most importantly the end date of June 30, 2025. They're also reporting on lease obligations with line items like lease monthly rent first year member. And similar for the second and third years. This gives us visibility into their future rental commitments. Finance costs are essential to analyze, and they separate them into cash and non-cash components. Finance cost cash member would be actual interest payments, while finance cost non-cash member might include things like amortization of debt discounts or premiums. Vendors member refers to accounts payable, money the company owes to its suppliers, and short-term loans member covers their immediate borrowing obligations. There are some specific past dates like March 2023 mentioned, possibly related to specific financing rounds or significant operational events. The company is also detailing its property, plant and equipment. Office furniture and equipment member and production equipment member are clear categories showing their investment in physical assets. Leasehold improvements, one member, would relate to any modifications made to leased properties. And right of use asset member is a standard accounting term under newer lease standards representing the asset recognized for the right to use a leased item. Capital work in progress member shows investments in assets that are still being constructed or prepared for use. And land and buildings one member clearly indicates their real estate holdings. Given their industry, the mention of battery technology member is central. This likely refers to assets or expenditures directly related to their core technology or research and development in battery technology. The company also provides data broken down by age of receivables or payables, such as 60 on to 90 member, meaning overdue accounts between 61 and 90 days. And 31 to 60 member for accounts overdue between 31 and 60 days. This is a good indicator of how well they are managing their collections and payments. More than 90 member refers to accounts that are significantly delinquent. A high number here could signal cash flow problems. Current member likely refers to current assets or liabilities, meaning those expected to be converted to cash or settled within 1 year. We've seen retained earnings member throughout the equity section. High retained earnings can indicate strong profitability and a disciplined approach to reinvestment. Accumulated other comprehensive income member captures gains and losses that are not recognized in the income statement but affect equity. This can include unrealized gains on investments or foreign currency translation adjustments. Warrants one member is another specific reference to their warrant holdings. Contributed surplus member often relates to amounts received from shareholders in excess of the par value of shares. And share capital member is the nominal or par value of shares issued. Together, these equity components paint a picture of the company's capital structure. The ending date of June 30, 2024 provides a key comparison point for the current period's June 30, 2025 figures. We see a lot of data points for the period from October 2023 to June 2024, giving us a view of the prior fiscal year's performance. And then the periods from April 2025 to June 2025, which is the current quarter's performance for many of these items. The dominant currency is the US dollar as indicated by USD. And then we have units of shares for equity related items. The term pure might refer to a specific type of financial instrument or valuation method. We also see the Canadian dollar mentioned, which is relevant given their headquarters at Todascroll as for Exhibit 99.1 and 99.2. These house the actual unaudited financial statements and their management's discussion and analysis, which provides management's perspective on the financial results, and the business operations. Exhibits 99.5 is an investor presentations from the CEO and CFO. Confirming the accuracy of the financial reporting, Exhibit 99.5, is an investor presentations from the CEO and CFO, confirming the accuracy of the financial reporting. Exhibit 99.4 is an investor presentations from the CEO and CFO, confirming the accuracy of the financial reporting. Exhibit 99.5 is an investor presentation, often a summary of key highlights and future outlook. Now let's look at the broader picture. From a quick glance at the numbers, particularly the earnings per share increasing from 2.37 to 2.52, Electrovaya shows some positive momentum. A slight decrease in liabilities compared to prior periods is also a good sign, suggesting they might be getting a handle on their debt. However, the devil is always in the details. While the numbers seem stable or slightly improving, we need to consider the market context. The battery and energy storage industry is highly competitive and capital intensive. Are these improvements enough to signal a strong growth trajectory, or are they just treading water? The significant amount of data related to warrants and stock options needs careful watching. If these are exercised, it could dilute the value for existing shareholders. The company's strategy in managing its assets across different locations, especially in the US and Canada, will be key. Their investment in battery technology is their core, and we need to see consistent progress and perhaps competitive advancements there. The aging of their accounts payable and receivable, indicated by the 3160, 6190 and over 90-day buckets, will be a strong indicator of how well they are managing their operating cash flow. If these delinquency In conclusion, Electrovaya appears to be navigating a challenging but promising industry. The recent financial performance shows some positive signs of stability and improved profitability per share. The management seems to be focused on controlling liabilities and managing their capital structure. The key risks for Electrovaya will likely involve intense competition, technological obsolescence, and the successful scaling of their operations. An opportunity lies in the growing global demand for sustainable energy solutions. If they can continue to innovate and efficiently manage their finances, they could be well positioned for future growth. However, the details on warrants and receivables need continued scrutiny to get a clearer picture of underlying financial health and shareholder value. What's your take on Electrovaya's latest report? Do these numbers paint a picture of a company on the rise or one facing headwinds? Let me know your thoughts in the comments below. If you found this breakdown helpful, please smash that like button and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community. The link is in the description below. Thanks for watching, and I'll see you in the next one.